All right, this is a review for Wednesday, June 19th, 2013. Today was Fed Day. FOMC released their wonderful statement. And I'd mentioned on Tuesday that it does not matter if we have a Fed announcement or unemployment claims. Economic releases have little bearing over whether or not the effectiveness of the box changes. And so I'm going to go over that and show you what you already saw, but break it down and explain it to you. So in the morning, we had this box form at 7:06. So again, I'm in Mountain Time Zone, so this is about 24 minutes before the market opens. And then we had this short at 7:34, so just a few minutes after open. It worked out beautifully. And we had an RTM trade that worked out nicely. So you would have been filled on this candle at 8:25 Mountain Time. And if you're just scalping this, you would have been filled somewhere in here. If you do something else, this got one tick away from breaking to the upside, and it worked out. So 2 for 2. Nice trade. Okay, so here's FOMC. So you notice, the reason why I wanted to point out the time that this box formed, 7:06. Okay, so my time, the scheduled FOMC release, it seems to always change. Mountain Time 12:15. Today it happened around noon my time, and so there's something that you have to consider about the box, that if we've had several hours go by, so just always remember that what the box does is pick up specific types of activity, and when it identifies that activity, a box will form. And what that tells us as traders is that a high probability trade is forming, and to get ready, it's time to go to work. So that was at 7:06 that happened. And so here we are 5 hours later with new market conditions. Now, it doesn't make the trade invalid. It's still a valid trade, but you have to consider the fact that we've had several hours go by. In this case, 5 hours go by, and we get the next signal, because what happens is price will work, these signals, the arrows, they will work off of the previous arrow or the previous box. Whatever box is most current is what this works off of. So this long trade, obviously you would have lost that, but you're right back in and you make all your money back plus some. And then we get another long signal 12 minutes later approximately, and this is a nice little winner. And then we get another one. This is a smaller but nice winner. And then we get a short, and this one runs pretty good, several points. And then we get a short here. Okay, I wanted to bring this up. I had an email come in about this very trade here. And so the question was specifically, can I get into this short after this happened here? So before I answer that question, let me walk you through what we're looking at. So we had a box form and a red arrow that appeared pretty much when the box formed. And so as you can see, it didn't really get much further than what you're looking at. And it went one tick past. So there's a couple of things here. First of all, what I want to point out is that the way that I've explained to you how we trade the box, as I mentioned in Tuesday's review, is a way to trade the box. It is not the only way, but it is a way, and it's very effective. Many emails came in today. In fact, one guy, brand new, this was his first day, traded the Russell and pulled 7 points with 2 contracts, and that's awesome. So anyways, so my point is that the parameters, so the parameter specifically are on short positions, what we like to do is place a protective stop 1 tick above the box. And so this would have got you out. And then so then the email came in, and the question was, since we didn't get a long signal, it basically failed to go long, and price now has closed below the box again, can I go short? So that's kind of like asking me if you can go to the bathroom. I'm being mean, but in all seriousness, of course you can. I mean, you can do whatever you want to do, and obviously it worked. It's easy to talk about this in hindsight because we can see what happened after the fact, but in real time, there's a couple of things you can consider here. And the reality is that today's Fed day. On Fed days, the day that the FOMC releases their statement, we're almost always going to have bigger movement. It's almost guaranteed. There's been a handful of Fed days over the years that didn't do much, but we had great movement today. It was beautiful. We had beautiful trades. You should have made a killing today. I mean, today you should have made so much money you wouldn't know what to do with yourself. But so the box is simple. It's black and white to us, and it should be to you as well. It identifies a high probability trade is forming, and the arrow shows the highest probable direction. We did not get a blue arrow. So if you trade it the way that I've described and you put a stop 1 tick above and you got stopped out, this doesn't happen very often. In fact, if you look back, try to find another one like this. These are pretty rare. So the answer to the question, can I go short? It's up to you. That's the answer. If that's, if you want to get the parameters shouldn't change, in my opinion. If you're going to do that, I mean, obviously you don't know that this is going to run several points. In fact, it ran almost 10, so 32 to 23. No, it did run 10. So this ran 10 points on the ES. Actually, well, eventually ran more than that, but that's after market. But while the market's still open, this thing ran more than 10 points. It ran, well, that's his extended Globex garbage, but it ran 10. Let's just call it 10 points. So you don't know that that's going to happen. But what you do know is you know that today's Fed day, you're going to have increased volume, and we've already had good movement, and so you just gotta have to do what you want to do. And obviously, had you gone short again, you would have won that. You would have made this money back that you took a hit on, and you would have done really well. So that might not be a satisfying answer, but that's the answer. And as traders, we just have to make that decision. And fortunately, there's not a lot to decipher here. We don't have to run a bunch of analytics. We don't have to look at a bunch of indicators that are do not much more than confuse most people. It's just red means sell, blue means buy. Well, really what it means is red means down and blue means up based upon probability. And that's it. We just, you have to make that decision. So this is unique. So really what I'm saying is that this type of scenario, this is pretty unique. It doesn't happen very often that we have a short, it goes nowhere, and then 1 tick past, and then it, drops to the floor basically. I mean, that's a pretty hard drop, a 10-point drop into the close. So just something to consider. If you traded that one and that's what happened to you, then you know exactly what I'm talking about. And if you didn't trade it, this is really good to see, so that when it happens again, because I'm sure it will, you have a frame of reference that on the last Fed day, which was June 19th, 2013, we had this unique situation with the box, and you have a point of reference. Okay, so in closing, to wrap this up, whether it's Fed day or any other random day, the box it's programmed to do a very specific job. So it doesn't know, nor does it care if the Fed is going to release information. So let's actually look at the announcement. So, okay, so it doesn't know. Unfortunately, we did not get a box here. It would have been nice to have a box in here so that we would have got one signal instead of two, but it is what it is. And so we take the trade. In the email that all of you received with instructions to installing the box on NinjaTrader, what I had included in there were 4 simple, straightforward tips from a fellow box trader who averages, no less than $1,000 a day. And this is coming from someone who does really well. But what he does well is he sticks to the simplicity of the box. And so he just has 4 simple parameters. The first one is simply to take the trade. So when a trade appears, take it. And number 2, place the stop. So the stop was just right down here. We can't see the box, it's way off screen. But it was right, kind of in the middle of this. And the third rule was take the loss if it happens. Now, if you think about that for a second, what do a lot of traders do? Well, what a lot of traders do is they try to hold on to a trade hoping and praying, with an emphasis on the word praying, that the trade is eventually somehow miraculously going to work. And so if you were to do nothing more than take the loss if it happens, which is going to happen, if I guarantee you anything, I guarantee you that you will have losing trades. Probably not very many. They're going to be far and few, but they will happen. So long, boom, you'll lose it, but you're right back in. And you're going to get filled somewhere in here, because by the time you're out, we get this signal and your finger on the trigger, pull it, boom, you're in, and you made all of it back plus some. And so his 4th rule is to continue to trade it. So think about that for a second. Why would he say that? Well, he says that because, it's really unfortunate, because this industry is full of a lot of garbage, a lot of very useless tools, systems, and programs that really set people up and traders up for failure. And whether it be directly or indirectly, it sets them up for failure. And chances are many of you watching this have gone through programs like that. And so what they've done is instilled in your psyche, in your minds, in your psychology, that, well, what you need is to control your emotions. And my opinion on that is absolutely not. It has nothing to do with that. The only reason why this topic of the psychology, quote unquote, of trading sets in is because people feel a need to convince themselves or justify themselves that the ineffective tools that they've been using somehow miraculously will work because they've seen them work a couple times. And so what we do is we don't base trade decisions off of what happened one time. We're not going to all of a sudden change our approach, change our strategy, not take this trade because we lost this one. We don't do that. What we do is base trade decisions off of what happens most of the time. And most of the time, as all of you watching this that either currently use the box or if you're trying it out, most of the time this thing pumps out cash. And now, you don't have to take my word for it. You've seen it live and it does exactly what you're looking at. And so this is why this trader, his 4th, call it a rule, is to continue to trade it. So it completely puts emotion aside. You're like a robot. Blue, red, and you just react that way. And fortunately, every single trade is the same as far as what we do. Okay, so I've explained this before and I'll walk you through it again. So number 1, a box forms, identifying a high probability trade. When the arrow form, that's our trigger. Boom. And so, at least the way that we trade it, we're in. We get in the market. We want the odds in our favor. And the arrow shows us where that is. So we're in. We immediately move a protective stop 1 tick under the box if we're long. I like to take profits initially, a tick under the blue line, a tick under the green line, and then take my stop loss and slowly move it up, protecting profits. For the very reason that you see this happen. These price levels are very highly reactive. The market respects them, okay? And so knowing that, and knowing that there's a very high probability as well for price to come back to the midpoint, or what I call RTM, reversion to the mean, it behooves you, I don't ever use that word, I wanted to throw that out there. It behooves you as a trader to take profits at these levels when the market presents it to you. And I had brought that up earlier. One of the one of the downfalls of a lot of traders that I think I did it in the Tuesday review. But one of the many downfalls to traders is they don't take profits when the market presents them to them. They're up 3, 4, 5, 6 points, and they think, oh, this is going to run 100 points. The name of the game is to make money. So take the money and run, as we say it. So, and that's it. It's the same thing over and over and over again. Today should have been massive. Today should have been, this RTM trade worked here. Let me get my crosshairs up. So pulls back to the midpoint, boom, you're in, snag a little bit there. It's just one trade after another. This trade won. This trade won. We've already gone over these, but that's it. It's that simple. It's the same thing over and over and over again. And a lot of you are probably sick of hearing me say the same thing over and over again, but it's just what it is. It's the truth. And so this it's so straightforward that you have people like, I just got an email. First day, never traded this before, pulled out 7 points on the TF, which is the Russell. And keep in mind, there's 10 ticks per point. Each tick is $10. First day was trading with 2 contracts, and do the math. It's not difficult. So anyways, that's a wrap. Today was awesome. Tomorrow's going to be awesome, and the next day, and the day after that, and every day is going to be different, but, it's the same thing over and over and over again. So if you have questions, go ahead and send them to support@predictionpointtraining.com. And those of you that are in our training group, we will see you tomorrow bright and early for a live market session.